Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after yesterday's downside challenge respects the level of 71.45 support, the market staged an impressive rebound and from there challenges the 60-day moving average, which is seen around 72, 60, 65 and respectively holds. At present, with the holidays in China and the UK, may actually distract some of the broader attention back onto this Friday's US non-farm payrolls, with the forecast estimated around 325,000 jobs added in May. Meanwhile, there is growing talk that the US Federal Reserve could resort to hiking rates by 50 basis points in June and July to continue to contain hot inflation. However, if we see a print above 550,000 or higher, it may actually argue that the economy is strong enough to withstand a series of 250 basis point rate hikes. Next week, for the Australian dollar, the market eyes the RBA, and also there's much talk about either a 15 or 40 basis point rate hike, as it currently stands around 0.35. Tuesday at 2:30, all eyes will be seen if whether or not we get a rate hike of either a 15 or 40, as the market may actually still stage a further rise. With the Australian dollar looking above 72.65, would see a rise to 73.25. With any pullback, see short-term support around 72.05. As I mentioned, the market is still looking very closely to the US job numbers later today, as the euro also stays an impressive rebound in front of the level of 106.25 on Thursday, with the US dollar, which measures the greenback strength against a basket of 6 major currencies, staging a retreat above the 102 back to 101.70. The euro has managed to gain further ground. Looking to the top side, resistance covers around 107.85 to 108.45. And from there, may actually see a failed bullish challenge and look for a pullback that is back towards that lower side of 106.25. The dollar yen wobbles as it holds underneath the key resistance level of 130, figure 35. And in light of the pattern, the market may actually stage a slight pullback anywhere towards the region of 129.55 to 128.85 and then reassess from there. With the dollar weakening, the sterling has staged an impressive rebound from the region that viewed the support area around 124.15 to 45 and now looks towards this downtrend. Now a break of this level, which is somewhere around 126.05.45, will give further coverage up towards 127 to 128 as a potential target. Technically, it does support a further case to the upside. Sterling Kiwi reaches its downside target of 191 and now seeing a little bit of profit taking coming back into play. Along with that, we do see a little bit of bullish divergence on the RSI. I feel there is much room to at least to 193 as a rebound and then maybe see another down challenge. Since the rebound of 1,800 and low 30s, the market has looked back towards that top side key level of 1,870.80. However, there's been a little bit of hesitation towards that top side, and we're currently seeing a pullback. If this continues, which may be a little bit indecisive due to the fact that the dollar is a little bit weaker, and also depending on the non-farm payrolls numbers, could see a key point above 1,880. As a break there may give further scope up towards 1,900. So do be on your guard into tonight and how you wish to look upon this level as a key point, as I feel that maybe there is a potential stop loss brewing just above there. Finishing up with oil, for the market stays an impressive rebound after taking the challenge lower to 112.40.60 and then surging back up towards the top side here. Currently with 116.25 to 118.5 as a resistance, and also I do see the key reversal in place. May eventually see some weakness back towards the bottom side. We do need to see a break of 112.40.60 to reinstate the downside further and also strengthen up that negative candle. Well, that wraps it for the week. Thank you very much for joining me. And as always, go out for the intraday report. I hope you enjoy the great start to the new weekend.